Howdy friends. So we are basically discussing the provisions regarding updated return, and the video is in two parts. Uh, the first part has already been uploaded, and in the first part we had discussed the provisions of section 139(8)(a), and this is the second part and the concluding part. And in this part of the video, we will be discussing the provisions of section 140B, which pertain to tax on updated return. Before moving to our discussion, let's very quickly recap the provisions of section 139(8)(a), which we discussed in detail in part 1 of the video. So we noted that updated return can be filed by any person for an assessment year in the prescribed manner, and it can be furnished whether or not the person has furnished a regular return under section 139(1) or a belated return under section 139(4) or a revised return under section 139(5). The time limit to furnish updated return is within 24 months from the end of the relevant assessment year. We noted 3 exclusions. In such cases, the provisions of updated return do not apply. So updated return cannot be filed in these cases. We also noted 3 cases where the person is ineligible to furnish an updated return. That means an updated return cannot be furnished by a person in these cases. Then we also discussed a few points regarding treatment of losses, right? And then we also took a look at certain illustrations. We will now discuss the provisions of section 140B, which deal with tax on updated return, right? Now, when a person furnishes an updated return, the person needs to pay the tax upon furnishing of updated return, and the tax needs to be computed in accordance with the provisions of section 140B. So we will be discussing section 140B in this video, and we will also be looking at the relevant illustrations. So amount to be paid. What is the amount to be paid while a person furnishes the updated return under section 139(8)(a)? Where an updated return is furnished by the assessee, he should pay the following before furnishing the updated return. So the following amounts needs to be paid by the assessee before furnishing the updated return, and such return should be accompanied by proof of such payment. So the following needs to be paid before furnishing the updated return, and the assessee needs to also attach the proof of the payment of such amounts along with the updated return. Number 1, tax payable on the basis of the updated return. This is but obvious that when you furnish an updated return, such furnishing cannot cause a loss of tax revenue to the exchequer. This is what we discussed in part 1 of the video. So there will be a tax which will become payable on the basis of the updated return. So that is what the SSE needs to pay. Second, the SSE needs to pay interest and fees under any provision of the Act for any delay in furnishing the return or any default or delay in payment of advance tax. So we would have studied the provisions regarding interest under section 234A, 234B, 234C and payment of fees under section 234F. So when a person furnishes an updated return, interest may be leviable for delay in furnishing the return, right? If the updated return is the first return, that means if the person has not furnished any return before, so the updated return will be the first time the person will be furnishing that return for that assessment year. And since the updated return will be furnished after 31st of December of that assessment year, that means after the last date which is available as per the current provisions for filing a belated return or a revised return. That means there will be a delay right? That there will be a delay beyond the due date mentioned under section 139(1), which is either 31st of July or 31st of October or 30th of November. So that is the due date to furnish a regular return of income. Obviously, when an updated return is furnished, there will be a delay in furnishing the return of income, and consequently, two things will happen. Interest will become payable under section 234A and fees will become payable under section 234F. Secondly, there may be a default or delay in payment of advance tax, right? So advance tax will be payable in the relevant financial year pertaining to that assessment year for which updated return is being furnished, right? If there had been a default or delay in payment of advance tax, then interest will be payable under section 234B and 234C as well. So interest and fees will need to be paid as applicable. And thirdly, the person will also need to pay an additional income tax upon furnishing of updated return. There is something that we will talk in some time. The updated return is regarded as defective if it is not accompanied by such proof of payment. We know that section 139(9) deals with the provisions in respect of defective return. And as per these provisions in brief, where the assessing officer considers that the return furnished by the assessee is defective, then he can intimate the defect and give him an opportunity to rectify. If the defect is not rectified, then the return is treated as an invalid return, and the provisions of the Act apply as if the assessee had failed to furnish the return, right? So if the return is treated as a defective return, then an opportunity is provided, and if rectification is not done within the time allowed, then the return is treated as invalid as if the assessee had failed to furnish the return. So it's important that the updated return is accompanied by the proof of payment of these amounts, because if it is not accompanied, then the return will be treated as defective under section 139(9), and these amounts need to be paid before furnishing the updated return. So number one, tax needs to be paid on the basis of the updated return. Number two, interest and fees applicable as per the provisions of the Act needs to be paid. And thirdly, additional income tax needs to be paid. Before we move further, we will very quickly take an overview of the provisions of 234A, 234B, 234C and 234F, because otherwise we may not be able to fully understand the discussion in this video. So as far as default and furnishing of return is concerned, two implications arise. One is interest under section 234A applies and fees needs to be paid under section 234F. What is section 234A? We'll take a very quick recap. The assessee is liable to pay interest under section 234A where the return of income for any assessment year is furnished after the due date or is not furnished. In the context of furnishing of updated return, the assessee will be furnishing the updated return after the due date, and therefore interest under section 234A will arise. And what is the formula? Simple interest is applicable. Simple interest under section 234A is equal to 1% per month or part of a month on the amount of shortfall for the period from point A to point B in the context of furnishing of updated return. Point A is what? Point A is date immediately following the due date of furnishing the return under section 139(1), which will either be 31st of July or 31st of October or 30th of November. That will be point A. Point B will be the date of furnishing of the return, which is the updated return. So from the date immediately following the due date of furnishing the return to the date of furnishing the updated return, simple interest under section 234A will be calculated at 1% per annum or part of a month on the shortfall. And in this context, shortfall will be tax on the total income determined as per the updated return minus prepaid taxes, which could be advance tax paid, TDS and TCS, and the relief under section 89, which is calculated while computing income under the head salaries, and then AMT credit allowed to be set off under section 115 JD alternate minimum tax. The credit relating to that is called AMT credit. So all these amounts will need to be reduced from the tax on the total income, and that will be considered as the shortfall, and interest under section 234A will be leviable on the shortfall. In addition to interest under section 234A, fees for default in furnishing return of income will also need to be paid under section 234F. And fees is payable where a person is required to furnish a return of income under 139, but he fails to do so within the time prescribed under 139(1) because he is now furnishing the updated return. In such case, fees under section 234F is rupees 5,000. However, if the total income is not greater than rupees 5 lakh, then the fees is only rupees 1,000. Then as far as the payment of advance tax is concerned, interest can be levied under section 234B and section 234C. 234B provides for payment of interest if there is a default in payment of advance tax, and 234C applies when there is deferment of advance tax. Deferment means when the SAC postpones the payment of advance tax beyond the due dates which have been specified for payment of advance tax. So for default, 234B applies, and for deferment, 234C applies. So let's take a quick look. Interest is chargeable where the SAC defaults in payment of advance tax, and 234B interest is applicable where in any financial year he is liable to pay advance tax, but he has failed to pay such advance tax, or the advance tax paid by him is less than 90% of the SS tax, right? So whenever the updated return is furnished, we will need to see what amount of advance tax was paid, if any, or whether it was paid or whether it was not paid, and accordingly compute interest under section 234B if it is applicable. Interest is payable on the amount of shortfall, and the shortfall is the SS tax. That means in this case it will be tax based on the updated return less advance tax paid if any. Okay, this will be the amount of shortfall. That means the default which has been made in relation to the payment of advance tax. While computing SS tax, prepaid taxes, relief under section 89 and AMT credit under section 115 JD will be reduced. And simple interest under section 234B will arise, which will be calculated at the rate of 1% per month or part of a month on the amount of shortfall, which is the amount of SS tax minus the advance tax paid. And what is the period for which interest is to be levied? From point A to point B. Point A is 1st April following the financial year in which advance tax is payable. So from 1st April till the date of payment of tax. Till the date of payment of tax in our case, before furnishing the updated return of income. So till that date, from point A to point B, simple interest will be applicable under section 234B. Similarly, interest for deferment of advance tax is payable under the provisions of section 234C. So where in any financial year the SAC is liable to pay advance tax, but there is shortfall in the payment of such advance tax. As we know, advance tax is payable in installments round the year across the financial year, and there are 4 installments, basically 4 due dates: 15th of June, 15th of September, 15th of December, and 15th of March. And if there is shortfall in the payment of advance tax in each of these 4 cases, then simple interest is payable under section 234C. So for example, by the due date of 15 June, 15% of tax due on return income should have been paid, right? And if there is shortfall, that means 15% of tax due minus advance tax paid up to this particular due date of 15th of June. Then on this shortfall, 1% per annum for 3 months on the amount of shortfall is the interest under 234C. Similarly, for 15th of September, for 15th of December, and for 15th of March. So in this particular fashion, interest is to be computed under section 234B and 234C. So coming back to the provisions of section 140B, the SSE needs to pay 3 amounts before furnishing the updated return, and the return needs to be accompanied by the proof of payment of these amounts. First is tax, second is interest and fee as applicable, and third is additional income tax. Now there could be two situations involved. One, where an earlier return has not been furnished by the SSE. That means the SSE has neither furnished a regular return nor a belated return nor a revised return. No return has been furnished, and the updated return under section 139(8)(a) is the first return that the SSE is furnishing for that assessment year. That is situation number one. Situation number two could be where an earlier return has been furnished and now he is furnishing an updated return. Let's take a look at situation 1 first and see how will the amount of tax payable before furnishing of updated return be computed. So in situation 1, where an earlier return, that means a regular return or a belated return, has not been furnished by the SSE, amount to be paid before furnishing the updated return is computed as given below. Let's look at the table. So the first step is to compute the tax on total income declared in the updated return. Okay. So the amount of total income which the person is declaring in the updated return, you need to compute tax on that amount of total income. Right. This is number one. From such tax, the following are to be reduced. Right. Basically, these are prepaid taxes like advance tax, TDS and TCS, and then the relief claimed under section 89 and AMT credit claimed to be set off under section 115 JD. So this will give a balance, and the balance will be what? The balance will be tax payable on the basis of the updated return. Okay. To this, two things need to be added. First, we need to add interest under section 234A, 234B, 234C and fee under section 234F. Right? Because no return has been furnished so far and updated return is the first return, that means there has been a default in furnishing of return of income by the due date prescribed under section 139(1), and therefore two things will happen. First, the SSE needs to pay interest under section 234A for default in furnishing return of income, and also fees under section 234F of 5,000 or 1,000 as the case may be. And then depending on the amount of advance tax which has been paid earlier, we need to compute interest under section 234B and 234C as well. So interest and fees needs to be added. Lastly, we need to add the amount of additional income tax. Now, additional income tax is payable in terms of section 140B when an updated return is being furnished. Okay, additional income tax. And how is this computed? It's given in the table. We know that the time limit to furnish updated return is 24 months from the end of the relevant assessment year, right? So for example, if this is the assessment year, so assessment year 23-24, for example, okay? And this is 31st of December 23. 31st of December 23 is the last date by which you can furnish a belated return or a revised return. If the person has not furnished the return by this date, then an updated return can be furnished even beyond this date, but up to 2 years. So this is year 1, and this ends on 31st of March 2025, and this is year 2, which will end on 31st of March 2026, and this is 31st of March 2024. So assessment year 23-24 ends on 31st March 24, and the last date for filing belated or revised return is 31st December 2023. And beyond this, updated return can be filed. So updated return can be filed up to 31st March 2026, which is 24 months from the end of the relevant assessment year. Okay. Now situation 1 is if the updated return is furnished after 31st of December and before completion of 12 months. Or the second situation could be if the updated return is furnished after 31st of December but before completion of 24 months, right? So in situation 1, from 31st of December till the end of 12 months from the end of the relevant assessment year is situation 1. And if the updated return is furnished after this date and up to the end of 24 months, then this is situation 2. In situation 1, additional income tax is equal to 25% of the aggregate of tax, including surcharge and cess and interest payable. And in case of situation 2, this 25% is enhanced to 50%. Okay, so this 25% or 50%, as the case may be, is computed on tax plus interest, and tax includes surcharge and cess. So if we go back to our table, then additional income tax will be computed at the rate of 25% or 50%, as the case may be, on tax and interest. That means tax payable on the basis of the updated return, and this will include surcharge and cess as well, plus interest. Okay, interest under section 234A, 234B and 234C. The point to note is, while computing additional income tax, fees is not to be included. So additional income tax is not payable on fees, it is payable on tax plus interest, right? So you will compute additional income tax and you will add this as well. Therefore, this will be the total amount which will be payable before furnishing the updated return. So tax payable on the basis of updated return plus interest and fees plus additional income tax computed on interest, computed on tax plus interest, not fees. And this will give the total amount payable before furnishing the updated return. Now situation 2 is a situation where an earlier return has been furnished, which could either be a regular return or a belated return or a revised return. In such case, how will the amount be computed before furnishing the updated return? Let's see the table. Firstly, you will compute the tax on total income declared in the updated return, right? From this, you will reduce the amount of relief or tax referred to in section 140A, the credit for which has been taken in the earlier return, right? So this refers to the self-assessment tax. So since an earlier return would have been furnished, self-assessment tax also would have been paid at the time of furnishing that earlier return. And the credit for that tax paid will need to be taken while furnishing the updated return, because you are not expected to pay that tax again which you have already paid in, by way of self-assessment tax. Let's take a very quick look at the provisions of self-assessment tax, and then things will be more clear when we discuss the provisions. So self-assessment tax provisions are contained in section 140A, and this is something that we would have studied. So the assessee may have tax payable on the basis of the return which he is required to furnish, right? And the assessee is liable to pay such tax before furnishing such return, and this is called self-assessment tax. So when the earlier return was furnished, the assessee would have paid self-assessment tax. The assessee would have computed his tax liability or self-assessed his liability to tax and paid that amount at the time of furnishing the earlier return. And basically, self-assessment tax, how it is computed? You first figure out the tax payable on the basis of the return, and then you reduce the prepaid taxes, right? For example, advance tax, TDS, TCS, and then again relief under section 89 if any, and AMT credit under section 115 JD if any. So that results in the balance tax which one needs to pay at the time of furnishing of return. To that, one needs to add interest under section 234A, B and C as applicable, and fee under section 234B as applicable, right, at the time of furnishing of return, and then that gives you the total amount payable on self-assessment. So this is the amount which the assessee would have paid when he filed the earlier return, and therefore those amounts should not be paid again at the time of furnishing of updated return, and therefore you need to reduce such amounts for which the credit was taken while filing the earlier return. So you reduce this amount. Next, there could be some amount of TDS or TCS, right? Which has not been included in the earlier return, for which you would not have, for which the assessee may not have taken the credit while furnishing the earlier return, right? Therefore, if there is such TDS or TCS credit, if there is such amount of TDS or TCS, it also needs to be reduced. So this is the incremental amount which was not considered earlier at the time of furnishing the earlier return. So if there is an additional TDS or TDS which was deducted or collected on any income which was not included in the earlier return, that means this is something extra which was not considered before, and now the credit needs to be taken for that amount of TDS or TCS, and consequently we need to reduce that as well. Then we also need to reduce AMT credit under section 115 JD, which was not claimed in the earlier return. So this is also an incremental amount. So in effect, what was not claimed earlier at the time of filing the return at that time will now be claimed at the time of furnishing the updated return, right? Then we will need to add the amount of refund, if any, issued in respect of the earlier return. If while furnishing the earlier return, you had claimed a refund which was issued, right, then you need to add it back. This is important in order to determine the final amount which is payable at the time of furnishing the updated return. So this will give you the amount of tax payable on the basis of updated return. So tax on total income declared in the updated return, tax as per updated return. Then you need to reduce the taxes for which the credit was taken while furnishing the earlier return, the self-assessment tax. Then you need to also deduct the incremental amount of TDS or TCS and the AMT credit under 115 JD. You need to add the amount of refund, if any, issued in respect of the earlier return, and then consequently you will arrive at the amount of tax payable on the basis of updated return. To this amount, two things need to be added, as we discussed in the above table as well. In the above table as well, these two things need to be added. One, we need to add interest under section 234B, 234C, right? Now 234B, 234C is to be added on account of default or deferment in relation to payment of advance tax. Now you would note that in the first situation, where an earlier return had not been filed, an updated return was being filed for the first time, you were supposed to add interest under section 234A and 234F as well. But 234A and 234F is missing in this table under situation 2. Why? Because 234A and 234F interest and fees would have been paid while furnishing the earlier return if that was applicable at that time. In situation 2, the earlier return has already been filed, right? So 234A interest and 234F fees would have already been paid at the time of furnishing of earlier return, and therefore it need not again be paid at the time of furnishing the updated return. So only 234B and 234C needs to be seen whether it needs to apply, and then it needs to be added. And then you need to add additional income tax, and additional income tax, as we discussed some time back, will be computed at the rate of 25% or 50% of tax and interest. The additional income tax will be computed, and this will give you the amount payable before furnishing the updated return. So these are the two situations, and depending on the situation in which the case is following, you need to compute the amount payable before furnishing the updated return. Now I think we can move on to our illustrations. We will discuss two illustrations. Illustration 1 pertains to situation 1 and illustration 2 pertains to situation 2. Illustration 1 is a case where earlier return has not been furnished and therefore updated return is the first return which is being furnished. Mr. X of age 45 years has total income of rupees 10 lakh for the previous year 21-22. However, he did not furnish the return of income for assessment year 22-23. Realizing his mistake, he wants to furnish the return under section 139(8)(a), that means the updated return, on 20th of May 2023 and pay the tax due on this date. Right? So he will furnish the updated return and pay the tax due on 20th of May 2023. Due date to furnish return under section 139(1) was 31st of July 2022. He paid advance tax of rupees 17,000 on 25th of February 2022. Right? So during the relevant financial year 21-22, he paid advance tax, but only on one day, 25th of February, to the extent of rupees 17,000. He is eligible to furnish the updated return under the provisions. Compute the amount that Mr. X will need to pay at the time of furnishing the return. So this is the case in hand. Since an earlier return has not been furnished by Mr. X, the amount to be paid will be computed as follows. How will the amount be computed? Based on our discussion, first we will determine the tax on total income of rupees 10 lakh declared in the updated return. So the updated return is the first return and rupees 10 lakh is being declared as the total income, and tax thereon will be rupees 1,17,000. Okay. Let's quickly take a look again so that things will become clear to you. So in situation 1, we saw that the tax needs to be computed first on the total income declared in the updated return, from which you need to deduct prepaid taxes on account of advance tax, TDS, TCS, and then relief under 89 and AMT credit under 115 JD. That will give you the tax payable on the basis of updated return. To that, you need to add interest under 234A, B, C and fees under section 234F. And then you need to add additional income tax, and this will be the amount payable before furnishing the updated return. Now let's go back to the illustration. So first we will need to compute tax on total income of 10 lakh, which is 1,17,000. Then we will reduce the tax paid as advance tax, which is 17,000. Okay. That will give us the amount of tax payable on the basis of updated return, which is rupees 1 lakh. Now to this we will add interest under section 234A, B and C, and then fees under section 234F. Interest under section 234A for default in furnishing the return of income. How will this be calculated? Interest under section 234A will be equal to 1% per month, right, on rupees 1 lakh, which is tax payable on the basis of updated return, and this will be calculated for a period of 10 months. That means from 1st of August 2022. Why 1st of August? Because it is the date immediately following the due date of return. The due date of return was 31st of July, and therefore 1st August 2022. From there on, interest will be leviable to which date? To 20th May 2023, which is the date of furnishing of updated return, and part of a month will be taken as full month, and therefore interest under section 234A will come to rupees 10,000, right? Then we will add interest under section 234B, note 2. Interest under section 234B will be for default in payment of advance tax. See, the tax payable is 1 lakh, but advance tax paid is only rupees 17,000. So interest under section 234B will also arise, and it will be calculated at the rate of 1% per month on rupees 1 lakh for 14 months. How come? Because interest will be calculated from 1st April 2022. Why? Because it is 1st April following financial year 21-22, which is the relevant financial year. during which advance tax should have been paid. And therefore, following this financial year, that means from 1st April to which date? To 20th May 2023, because it is the date of payment of tax before furnishing updated return. And this comes to, part of a month is taken as full month, so this comes to 14 months, and therefore interest comes to rupees 14,000. So interest under 234 is 10,000, 234B is 14,000. How about interest under section 234C? 234C interest is for deferment of advance tax. And these are the 4 due dates: 15 June, 15 September, 15 December, and 15th March. And interest is computed on shortfall. What is the shortfall for 15 June? So how much advance tax should have been paid? 15% of tax due on return income. That means 15% of 1,17,000 should have been paid. How much advance tax has been paid? Nil, because advance tax was paid when? Advance tax was paid only on 25th February 2022. Before that, no advance tax was paid. Accordingly, shortfall will need to be calculated. This will be rounded off, and simple interest will be payable at the rate of 1% for 3 months into this amount, 525 rupees. Similarly, we will make calculations for the due date of 15 September, 15 December, and 15th of March. While calculating the interest for the due date of 15th of March, we will consider advance tax paid up to this date, which will be 17,000, right? In this particular case, we will reduce the amount of advance tax paid, 17,000, and accordingly make the computation. So the total interest under 234C will be 5,734. 5,734. And fees under section 234F will be rupees 5,000. Then we will compute the additional income tax under section 140B. And additional income tax will be how much? Will it be 25% or will it be 50%? Since the updated return is furnished before completion of 12 months from the end of assessment year 22-23, additional income tax will be at the rate of 25%. So assessment year 22-23 is the relevant assessment year, and the updated return is being furnished on 20th May 2023, right? And therefore, updated return is being furnished before completion of 12 months from assessment year 22-23. That means before 31st March 2024. And accordingly, additional income tax will be equal to 25% of the aggregate of tax and interest. The aggregate of tax and interest will be, tax is 1 lakh, interest is 10,000, 14,000, and 5,734. Fees will not be included. So aggregate of this will be 129,734, and 25% of this will be 32,434. So 32,434 will be the additional income tax, and consequently the aggregate of all this will be 1,67,168, which will be the amount payable before furnishing the updated return. Hope this is clear. Now let's move on to situation number 2. Situation number 2 deals with a situation where earlier return has been furnished and now an updated return is being furnished. Mr. X, age 45 years, furnished his return under section 139(1) for assessment year 22-23 on the due date of 31st of July, showing a total income of rupees 10 lakh by way of salary and taking credit of TDS deducted by his employer of rupees 1,17,000. So this was the amount of TDS for which credit was taken at the time of furnishing the return of income under 139(1), and it was furnished on the due date. However, he missed to declare an income of rupees 5 lakh in the return. Realizing his mistake, he wants to furnish the updated return under 139(8)(a) on 20th May 2023 and pay the tax due on this date. He is eligible to furnish the updated return under the provisions. Compute the amount that Mr. X will need to pay at the time of furnishing the return. Since an earlier return has been furnished by Mr. X, the amount will be paid as follows. Before we understand the computation, we'll take a quick look at what we discussed some time back. So this is the table. And what we need to do, first we need to figure out the tax on total income as per the updated return. From that we need to reduce one, the amounts for which the credit was taken at the time of payment of self-assessment tax. Then we need to, number two, take the credit for incremental TDS or TCS. That means TDS, TCS on the income which was not included in the earlier return, and AMT credit, if any, which was not claimed earlier. We need to add the amount of refund, if any, issued in respect of the earlier return, and this will give us the amount of tax payable on the basis of updated return. To that, we need to add interest under section 234B and C, if any, in respect of default or deferment of advance tax, right? And 234A and 234F will not be applicable because an earlier return has already been furnished. So 234A interest and 234F fees would have been paid at that time. Now the interest under section 234B and C that we now compute, in order to ensure that the interest that was paid earlier, we do not pay the same interest again, right? We will reduce this amount by the interest paid in the earlier return. So that means we will only add the incremental interest that needs to be paid at this point of time. And then we will add the amount of additional income tax. This will give us the amount payable before furnishing the updated return. So let's quickly go back to the illustration. So first what we will do, we will compute tax on total income of rupees 15 lakh declared in the updated return, because 10 lakh was declared in the original return and 5 lakh of additional income is now being declared. So 15 lakh is the total amount of income on which tax comes to 2,73,000. Then we will reduce the TDS, the credit for which has been taken in the earlier return, and the TDS was rupees 1,17,000. So this is what we will deduct. There is no incremental amount of TDS or TCS in our case. So this will bring us to the amount of tax payable on the basis of updated return, which will be 1,56,000. Now we will add the amount of interest and fees. And as we discussed, interest under section 234A is not payable as Mr. X has already furnished the earlier return, right? Similarly, fees under section 234F is also not payable. It was not payable at the time of furnishing the earlier return as well, because it was furnished on time, it was not furnished with a delay, and it is not payable at the time of furnishing of updated return as well. So this becomes 0. What is left is interest under section 234B and C for default or deferment of advance tax. First, we will take a look at interest under section 234B. And 234B interest will be computed at the rate of 1% per month on rupees 1,56,000. On rupees 1,56,000 for 14 months. Why 14 months? Because it will start from 1st of April 2022. What is this date? It is 1st April following the relevant financial year 21-22. And the interest will go on till which date? It will go on till the date of 20th May 2023, which is the date of payment of tax at the time of furnishing of updated return. Part of a month is taken as full month, and therefore the duration comes to 14 months, and consequently interest comes to 21,840. Interest under section 234C for deferment of payment of advance tax. We will compute this in the same fashion as we did for situation 1. So these are the 4 due dates, and 15% of tax due on return income needs to be paid, 45%, 75% and 100% needs to be paid, and then we need to reduce the advance tax paid up to the relevant due date, and accordingly we will figure out. Okay, in this case no advance tax has been paid because it is only the TDS credit that was taken, and actually the assessee did not pay any advance tax in this illustration. So in all these cases, nothing will be deducted. Minus nil, minus nil, minus nil, minus nil, and accordingly simple interest under 234C will be computed, which will aggregate to 7878. So interest under section 234C is 7878. Finally, we will compute additional income tax, which will be at the rate of what, 25% or 50%? It will be at the rate of 25% because since updated return is furnished before completion of 12 months from the end of assessment year 22-23. So end of assessment year 22-23 is 31st March 2023 and 12 months from the end is 31st March 2024. And since the updated return is being furnished on 20th of May 2023, the additional income tax will be at the rate of 25% of aggregate of tax and interest. Tax and interest 1,56,000, 21840 and 7878. So we will aggregate this and it will come to 185,718. 25% will come to 46430. This will be the amount of additional income tax under section 140B. So we will add 46430 and the total will come to 2,32,148, which will be the amount payable before furnishing the return of income. So with this, we end our discussion on the provisions for updated return. In part 1 of the video, we discussed the provisions of section 139(8)(a) regarding the basic provisions and the features for furnishing of updated return. And in this video, we have now discussed the provisions regarding tax on updated return, which are contained in section 140B.